So we are going to start with some very basics. If you do not mind, Joey,
Sure.
would you share your name and a little bit of your background?
Sure. My name is Joey Pedroza. I am, I guess, a software engineer by trade. I have a consulting business for software development, but also over the years in parallel, I've always dabbed in real estate. So I invest in real estate. And so I work with businesses. I work with just a lot of clients. I have a lot of bosses. And that's pretty much what I've been doing for the last, I don't know, 2 or 3 decades.
Awesome. Well, and so I'm curious, how did you ever find us? I don't
Actually,
even know this.
yeah, no. I found you on TikTok.
Okay,
So it was
that's what
one
I
of the
thought.
videos on TikTok that I saw, and it was talking about a lot about the capital funding and things like that. And so I heard a lot of your videos, and one day I just decided to make an appointment, which I did, and just try to put everything into action to see that I could do with all the different pieces that you were
Mhm.
offering, that I could do what I wanted to do, which was investing in real estate without ever touching my own money.
And prior to us working together, what had you done in terms of real estate? Had you just done anything with loans, or what was your process prior?
Well, before we did anything together, I didn't really flip homes. I would just buy homes to hold for the long term.
Okay.
Pre 2008, before the bubble burst back then, I was very heavily investing in real estate. So I was actually doing construction and everything. Then when the bubble burst, obviously I lost everything. And so I kind of got turned off by real estate, period. And it wasn't until the last, I would say, 3 or 4 years, pretty much when COVID happened, that I got back into it.
Awesome. Yeah,
Mhm.
that happened to a lot of people. So when you were buying the properties that you were holding, were you, and I'm sorry to dive deep in this, but it helps me understand, were you purchasing them cash? Were you getting a mortgage? What were you doing?
I was doing a little bit of both. I
Okay.
actually purchased, the idea was I wanted passive income. I had a goal
Hmm.
of obtaining 20,000 in passive income. So it was like I would save up money, from a regular income
Hmm.
and buy a property and know that my cash flow would be, let's say, $500 a month, right? And so the idea was, how many houses do I get until I hit my number of $20,000 a month in passive income? So I would strategically plan to buy certain properties. Sometimes I'll be like, hey, let's buy that house cash, because that will give me $1,000 a month towards my goal. So I actually bought two houses cash. I even sold some houses that had equity, because I knew I could turn it around and sell the one and buy three. And the money will be, a lot more than just the one. So I also played, that game as well, with selling some to get more. And then
Awesome.
after I did that, I decided to invest in multifamily apartment complexes,
Mm.
because I thought that's better than trying to have a bunch of single family homes, which is not true. It's a matter of preference. So I don't want anyone that's listening to this to think that I hate single family homes. I don't. In fact, I have some still. So it's just a matter of preference. And I was trying to focus on apartment complexes.
Got it.
Mhm.
Well, so let's kind of dive into the process a little bit. So you decided, hey, I'm gonna do capital stacking so I don't have to use my own money.
Yep.
So initially, how much did funding did you get with capital stacking?
$142,000. Well, the initial quote I was given was somewhere between, I think, was 75
Mhm.
and 100 is what it was. But I ended up getting 142, I think, to be exact.
Awesome. I love when we get more than we anticipate. That
Yeah,
obviously is a lot
that's
better.
the trend.
And
Yeah.
and I'm going to get into how you use that, obviously, but the
Yep.
process itself for getting the capital stacking, did you run into any challenges? Was there hiccups with it?
No, for me, it was very simple. I already had an LLC that was aged, so I didn't have to form a new one or anything like that. I just filled out the information and they do everything for you. So
Awesome.
once in a while, I think they say, hey, Joey, you need to call this number. They want to verify your identity, but that was it. And that was
Awesome.
just one person, I think, that I had to call.
So I'm glad. I'm glad to hear it was a positive experience. So then you got this money. So
Mhm.
walk me through, how did you utilize that? How were you able to use that in real estate? Because I'll be honest, you are the poster child of making this work. You are. A lot of people want to do it. They can't quite figure out the steps, how to make it work. But
Yeah.
I know personally you've done this multiple times.
Yeah.
So I'd love for people to hear, how did you do it?
Yeah. So I wanted to buy one house. And so obviously the capital stacking, you will liquidate those funds for the down payment.
Mhm.
And so I got such a high amount of capital stacking that I chose to do more than one at a time. So I ended up buying four properties, not just one. And I used all that money for the down payment on these properties. So my average down payment was between 25 and $30,000 for these properties. And so I got four of them. And then for the construction, because I know it's getting to a different topic. The
Totally
bank,
fine.
yeah, the bank pays for the construction. You only have to upfront a little bit of money and then you get reimbursed. So the difference between the down payments and what was left with my capital stacking, I just used to pay for a little bit of the construction, but I kept getting reimbursed. So that's
Awesome.
why I was able to fund 4 properties with that amount of money.
So this is a big point because I know you just said 25 to 35,000 down payments. There's going to be a lot of people that say, "Where on earth are you finding properties then for that price?" Because I
Yeah.
talk about it and people yell at me and say, "Those don't exist, Sarah," but you're proof of it.
Yeah.
Where are
Yeah.
you finding these? Where are you
So
operating
my
out of?
my particular properties were in Atlanta, but you find these properties in Texas, Florida, Arizona. So what I'm buying are distressed homes. These are homes that you cannot even get a normal loan on. So it requires, in my case, I did bridge loans, type of loan that you obtain the property and they help you fix the property.
Mm-hmm.
And so these are houses, in a way, I feel like I'm helping the housing market because
Mm-hmm.
these are homes that only investors can buy. And so
Yeah,
by us buying them and fixing them, we're putting them out into the world so now other people can live in it. So in a way, we're helping with the housing crisis with these distressed homes because no
absolutely.
buyers can get them. Mhm.
And so you went through the rehab process, which I know you learned a lot. And
Yep.
now are all four homes done?
Yes, actually, I have more than 4 now, but they're done. I already sold some. And
Awesome.
so, yeah, so everything is working according to plan so far.
So you're just going to keep doing it again and again.
Well, the answer is yes, because the capital stacking, once you sell everything off, you're back to a zero balance, and that money's still available to you to do it again. So in theory, I can do this over and over and over. I did 6 properties, and I thought I could do 6 a quarter. So this year, I'm trying to average 2 per month, is what I'm trying to.
Awesome.
But I'm also trying to help other people, like relatives, friends. I know some of your clients as well that I'm helping with trying to flip some houses. So I'm not just doing it for myself. I'm also, sharing the
Mhm.
knowledge that I've gained through this process with others.
And I'm going to dive heavily into that in just a moment because I think
Mhm.
what you're doing now with your knowledge is incredible. Let's talk briefly about because people get hung up on how are you going to pay that capital stacking back? So, at what stage, what was it in the process that allowed you to balance to get those down to zero?
Sure. So let's just say that you got $50,000 in capital stacking, and I had to put down $35,000. And these are true numbers, by the way. I'm not just making
Hmm.
them up. So I had to put $35,000. So I was able to liquidate the money, basically cash it out. And there's a small fee for that, but that's okay. And then I had to pay for construction, but my contractor accepts credit card payments. So I was
Mm,
able to just use the same capital stacking credit to pay my contractor. And let's just say I pay him $15,000 and I'm $50,000 in the hole, right?
hmm.
If we want to call it that. Well, the contractor, I pay him 15,000. He does the work for a week or so. Then I get reimbursed by the bank for the same 15,000 or more, right? Because it's not necessarily a dollar per dollar. It's based upon the percentage of completion. So if he completed 30%, the bank is going to give me 30% of the budget. Even if all I gave him was 15,000, he might have done $25,000 worth of work. I get all that money from the bank. I pay off the credit card that I used, and then I continue cycling that 3 or 4 times until it's done. Now, when construction is 100% finished and the bank reimbursed me for all of my expenses, all I'm out now is just the money I used for the down payment. So back to the beginning when I said I had to put 35,000 down, that's all that I'm on the line for right now.
And then when you sold the house, that's when you paid the 35
But then
off?
when you sell the house, you get all the proceeds and then you pay off the last bit of the credit card and then the rest of the money is yours to use as you see fit. So that's a profit. So
And
a
that's,
real
oh, go
number,
ahead.
yeah, I would
Yeah,
say
go
a real
ahead.
number was I bought a property for I think it was 150. Not I think I know it was 150. It cost me about 50,000 to fix and I sold it for 300,000, right? So that's about 100,000 buffer, but minus closing costs and commissions to the agents or whatever. In the end, I ended up walking away with about $75,000, right? So with that $75,000, that was just a profit.
And
So
that's after paying off everything?
correct. Well, my proceeds in that instance was over $100,000.
Right.
So then I had to pay off the credit card, what I
Yep.
owed on, and then the rest was profit. So the
Love
proceeds were
that.
like 126,000. So I paid off the other 50 and I walked away with 75.
And you did all of that without touching your own money.
That is correct.
That is
Uh,
awesome.
that is correct. And
That
that
is
is what I
awesome.
continue to do even now. And here's the funny part. I had the money. I didn't need to do capital
Hmm.
stacking. But the idea was, and for me, it's always a goal of making money using other people's money.
Mhm.
right? And so I was more comfortable keeping the $100,000 in my own savings account and then taking the capital stacking, investing that and making that work for me, right?
Mhm.
While I have the money in my savings account. Because a lot of people out there might have saved up enough money to invest, but the tricky part is now they're going to invest it, they have nothing left.
Mhm.
And so that makes a lot of people feel uneasy, where it makes them feel like, I want to invest, I know it's the right thing, but if I invest the 50,000 that I worked so hard to save, now I don't have anything left in my savings account. So this way I was able to keep that money in my savings account and still do exactly what I would have done with my own money anyway. Now,
Mhm.
sure, there's a small fee along the way for this, but the way I see it is, if you're going to make $90,000, well, now you're only making $80,000. So what? It's $80,000 in your pocket and you're not stressing out because you have your money in your own savings account. And so that to me is why I did it. I didn't need it.
And
I liked it.
and I like hearing that, because I'll be honest, that is the biggest stopping point for a lot of people, is that there's a
Yeah.
fee and they think, that 9.9% is going to break me.
Yeah.
I don't want to do this because of a fee. And obviously it didn't bother you because you realized without that, you wouldn't make that profit, and it'd
I
be a
know where
totally
the
different
money,
story.
correct. I
Mhm.
know where the money's coming from. So the idea is, if you don't have the money to invest, but you know that you want to invest in real estate or something like that, right? Then where do you get that money from?
Mhm.
If you don't have it, you have no choice but to do something like capital stacking. All that matters is that you're investing in something that sounds pretty sound, that you'll be able to pay that off and still have money you'll walk away with,
Mhm.
right? So that is what capital stacking, I'm a big believer in it. I recommend it to anyone. Now, if you have hundreds of thousands of dollars lying around, then maybe you don't need it. But if you're trying to get ahead in life and you don't have 50,000 saved up, then capital stacking is the way to go.
Absolutely. And I,
And
I
here's
love
the
hearing
thing.
that. Oh, good.
Yeah.
Yeah.
And here's the thing. It's only one time.
Mhm.
Capital stacking, you take the hit one time only. So if you're flipping several houses, it's only the first one that you had to pay the success fee. It's a one-time fee. So when you're flipping 3, 4, 5, 7 houses down the road, that's all, you're not paying anything for it. You're just
No.
reusing the same
Yep.
line of credit. So
You're recycling
so
it, which I
people need
love.
to think about, okay, I took a hit on the first one, but on 2, 3, and 4, I'm going to be ahead of the game, right? And so that's what
Mhm.
they need to on.
Absolutely. So there's a lot of beginners out there. What would be your advice to others who might be considering getting into real estate investing and they've heard about capital stacking, but they're just not sure? What's your advice to them?
Well, my advice to them is always to find a mentor, someone
Mhm.
that's already doing it, someone that's willing to teach them, someone that's willing to hold their hand through the process. There are many different ways that this happens through classes online, happens through, I did one that it's literally one-on-one hand holding through the whole process. We partner together, basically. That's another way that has been done. You can also have like a consulting fee that people will be involved as much as you want them involved, but you have to pay for
Mhm.
that. So that way they feel like, okay, I can do this on my own, but I can bounce some ideas off somebody else and hear what they have to say about the process. So, I mean,
Absolutely.
my advice is to not be afraid to try it, but to be smarter than I was when I started. I did it on my own without a mentor, and I screwed up a lot, and I found out things the hard way. And there's no reason for that nowadays. You can talk to somebody, build a relationship with someone that you can trust and work well together, and that's will be my advice.
And I think from those mistakes,
Mhm.
that's where you've gotten so much knowledge though. And what I love about you is you've learned so much. I've watched you. Your growth has been incredible. You've used everything and done it perfectly. But now you're not just keeping it to yourself. And so you're helping others. And so, I know you were doing the individual mentorships, but why don't you
Yeah,
talk a little bit about, I know you're now going to start doing like a weekly Zoom class that's going to
yeah,
be available to a lot more people. What's
correct.
that going to be like?
Well, the idea was, right now, I was helping some people one-on-one to go through the process beginning to end, from obtaining capital stacking, from figuring out the bridge loans, from finding properties, getting the contractors, from every little thing you can imagine that needs to happen. Instead of me walking you through it, it'll be real time, by the way. It'll be a live classes. So you'll be able to walk with me every step of the way, taking a flip from beginning to end. So they'll be able to see it actually happening right before their very eyes on a weekly basis, of course, be able to kind of get more immersed as to what it takes to make this happen. And that might
Mhm.
help them build confidence to be able to try themselves and be able to use the same tools that I'm using to be able to do it themselves.
Awesome. I love that you're doing that, because I think there's so many people that need a mentor, need to learn these things, but they don't they don't know where to go. And a lot of those programs are extremely pricey. And for a newbie,
Yeah.
that's out of your budget. So that's why I think this is fantastic. Are they going to have the ability to ask questions and pick your your brain a little bit.
Absolutely. Yeah, it's not just seeing what's happening, but they'll be able to ask specific questions. Be like, yeah, I saw that you said this or you did that. Why was that? And I'll be able to explain to them my strategies and what I was thinking at the time that I had the conversation with the contractor or the agent or whoever. And so they'll be able to have a Q&A every week. They'll be able to ask more questions and figure things out and even be able to present their own scenarios that I might be able to share my input into their situation. So it's not just about me, it's more about them, right? It's for them to learn and try to do what I'm doing. And
Awesome.
so yeah.
And what about, one of the biggest pieces that's hard for newbies is finding the right resources, finding a contractor, knowing all those pieces. Will you be able to give some? I know not everyone's going to do it in
Yeah.
Atlanta, but for people that do it
Yeah.
in areas that you're familiar with, will
Yeah.
you be able to give, some recommendations and referrals?
I can help through the process.
Yeah.
I don't know every single contract in every state of the United States,
No.
but I'll be able to help them through the process when they talk to a contractor, when they interview them, when they get quotes from them. I'll be able to pinpoint some things based on my experience and what I've done with my contractors to be able to help them. I'll even be able to interview the contractors and talk to them on the phone, all of us together, because it's always good to find good contractors, even in other states, because I might be able to invest in different states. So I'm always looking for growing my list to other states. Like I talked about North Carolina. I already have involvement in Florida, Texas, Atlanta is where I primarily focus on right now, but I definitely am working my angle in other states.
You're just going to take over the country.
Yeah.
In a couple
Yep.
years, I'm going to be able to say, I knew Joey when, and now you're going to have this giant portfolio.
That would be, but yeah. And
I
the
mean,
other,
go ahead.
yeah, I said the other thing too is I'm talking about flipping houses specifically, right? But no one goes out there and says, I want to flip houses for the rest of my life. The idea is if you're doing a real estate project, which is I'd rather call it than flipping, right? If I'm doing a project, what is my goal, right? What is my long-term goal? What am I trying to build wealth-wise or assets? And so the idea is that is just a means to an end where you get some quick cash to be able to fund your long-term goals. So when I talked about apartment complexes earlier, that's what I'm doing this for. I am saving a lot of this money so I can buy my own apartment complex of 100 doors minimum. And that's what I'm trying to build for the future. I also invest in other syndication models for apartment complexes. I also do some Forex trading. So I invest in different areas, but this money that I do, which is what I call a quick cash, is what helps me fund those long-term goals. If your goal is to have some properties paid off for long-term leases, for example, or rentals, that's fine. Just use this to pay those off. And so that's what this is for. So this is not something I do forever. It's just something that I'm going to do to help accomplish my big dreams.
I think it's amazing. I'm excited to see what you do with it.
Yeah.
It's fun to watch it. That's it on my questions. I wanted to keep it simple, but do you have any closing thoughts on anything that you think we should
Yeah.
share?
Let me just try to, because I have heard of people on firsthand, by the way, I'm sure you've heard this a lot too, that get turned off by the success fee. And to me, that is, if you're trying to get ahead in life and you have an opportunity that says your walk away cash is going to be between $40,000 to $50,000, right? But you don't want to proceed because of the success fee, then you're really missing out on $40,000 to $50,000 just because you didn't want to pay the 9.9%. But if you don't want to pay it, then that must mean that you have the money to do it cash. And if that's the case, then do it cash, and that's okay too, right? But in my case, I had some money cash. I didn't want to see it leave my account just in case something would have happened, emergencies. I just the comfort that it's there. And I'd rather make 10,000 less if I got 100,000, in credit, which I got more than that. I'd rather make 10,000 less on my first deal than worry about that success fee, right? So it means I profited, instead of, let's say, 75,000, I profited 65,000. And that is great. That's money I didn't have before. And so I would just say that if that is what's holding you up, just think about the big picture. Don't get caught up on the now detail of that money. Instead, just think about the big picture. And by the way, you don't pay that money out of pocket. That comes out of the capital stacking itself. So when we say you can do this without touching a dime from your savings account, that's why. Because everything that you pay for will come out of capital stacking, does not come out of your savings account.
That's awesome. And you know what? That made me think of a question. I know you touched on it. You liquidated the cards to use them. What was that process like? What did that entail?
It was very easy. So I had the same people that get you the capital stacking, they offer you a service to be able to get you the cash. So they send you a form, you fill out your credit card information, and then they wire the funds to your bank account. That's
awesome.
That's how simple it is.
And did it go as a cash advance, or did that still keep you at the 0%?
No, it keeps you at the 0%. And it's still, if you get points on the card for example, you still get all the points. And that's another thing to think about. So if you're paying money to liquidate those funds, a lot of like the Chase credit card, for example, it allows you to transfer that money that you earned to any bank account. So if you spent, I don't know, $50,000, $60,000, you can send yourself $600 to $700 to any bank account. And that helps offset any fees you might have paid to cash out because it's about 5%. So
That's awesome.
and so all the perks you get from credit cards helps offset the cost that you might be paying. So if you're hung up on, yeah, but to liquidate it, I had to pay 5%. Well, guess what? You might get 2.5 to 3% in benefits, a tangible, cash in your hands that will offset that fee. So in the end, that fee doesn't really cost 5%. It costs you less.
And it's
Mhm.
worth it. I mean, a lot of
Yes.
people make the mistake, they go into the bank, they do the cash advance, which is a fee in itself, and then it
Yeah.
raises your interest rate up to crazy rates. So it's
Correct.
worth it. Absolutely.
Yeah.
I love it.
Mhm.
Anything else?
No, I think, like I said, capital stacking, I think it's a
Okay.
way to go. Even if you have the money, it's always nice to be able to keep the money set aside for other things. You have like tons and tons of money, then maybe not for you. But for me, I had some and I still do capital stacking. What else is there? Real estate's an example to invest your money, but you could invest it in other things. As long as you know that investment is sound, that you will get back dividends and get that money back, then you can do this as well.